In this short video, I'll explain how to use and understand the market crash insight. Insights are conversation starters between you and your client which show quick strategies. They sit outside a plan, which means they do not alter the plan. In a couple of clicks, Voyant Insights can help you with a savings and investment strategy, or in this case show the impact of a market crash. In this plan we can see that Simon and Helen potentially cannot achieve their retirement goals, and this is shown by the shortfalls in the plan denoted by the red bars. So we're going to look at the increased effect a market crash could actually have. The insight is specifically designed to stress test your client's financial plan against the impact of a stock market crash or a period of market downturn. Before we run the insights, let's look at the major loss setting, and you can do this from dashboard and scroll down there to plan settings. The major loss setting is found here. The major loss setting can be edited for each client plan, or you can set them at a subscription level. To do that, you would do that from the Open Client Record screen and Configure and then Subscription Preferences. When you look at the market loss, the default age is used by the insight by default, but this can be edited either here or in the insight itself. The number of years field indicates the number of years you wish to model the disruption. The default is 1 year. If you increase the number of years here, these fields will become editable. Now you'll see there are two columns, the fixed growth column and the allocation percentile. The fixed growth column applies when the investment growth rate is used for growing investments and pensions. If you were to model using asset allocation, the allocation percentile will apply. In this plan, I am modeling using the fixed growth rate, but I'm just going to do a brief explanation of this. So if you do use asset allocation, there will be a different range of returns in a market crash scenario depending on the portfolio construction. So in other words, higher risk portfolios will show a greater drop than the lower risk ones. A lower number in the allocation percentile column tends to be a negative return, and a higher number a more positive return. The percentile values used in the insight are a measure of relative performance, so in other words, relative to the mean. The resulting output will be determined by the underlying market assumptions for each of those assets. So let's go now to the insight. Scroll up there and click on Insights. The insights you can access by either searching here or scrolling down and finding the market crash insight. The insight allows you to specify when you want to model the crash. This has come through from my default, or you can choose a different age. So let's get started. What you can see here is the impact that this market crash has had on the cash flow. We can see that red has come in a bit earlier, but let's not just take my word from it. You can then go to compare plans, and you can then pair it to the base plan. You can also choose the type of chart that you want. So I'm going to change this to asset chart. What you can do also is hide any of the non-liquid and the savings there which aren't affected by this market crash insight, and you can observe the drop in the asset at that specified age of the crash. So let's go back just to the single chart by clicking on simulation chart. The insight also highlights the planned first shortfall, so this identifies the first shortfall that's projected to be in the plan based on the original account growth projections, and also the simulated first shortfall as well. In other words, what's happening because we've used this market crash event. For a more granular analysis, you can go to Year View, and you can go to investments or pensions, because that's what it affects. Now, I'm going to just scroll to the year before the market crash event, which is here, and you can see that the ISA is growing by the net 5.5%. So that was my 6% less my fee. And then the following year, because I've got a 1 year disruption, I'll move up. You can see that it has used the market loss. So it's going to the -35 plus the fee of 0.5% as well. And then because we only did it for 1 year, I move up the following year and it goes back to the planned growths. The Market Crash Insight is a valuable tool for stress testing the financial plans by simulating market downturns. Let's just come out of Year View and I'll show you that you can get the inline help here. This feature is also available in the Insights. You just click on the dots and the inline help window will open. Inline help has a brief explanation of the topic and also links to knowledge base articles and other videos. The Market Crash Insight is also available in report form under Insight Reports. The Market Crash Insight will simulate one major loss episode. If you would like to do more than one, you can go to and create a what if. And then you can go to timeline, plus button bottom right hand corner, events, and you will see these special events here, and the major loss special events uses those settings from the dashboard plan settings here. So you can click on it, it will automatically go to the default age, but you can move that where you want. And if you wanted to add another major loss event in, you would go up here and click on this down arrow, save and add another, come back to the major loss event and pop it in wherever you want on the chart. So I'm going to click done to save all that, and then going to go to let's see and show you, as you can do with all what ifs and plans, you can go to the compare plans and compare the major loss what if, where we've got 2 major losses, to the original base plan. You again can go and look at the asset position and you can see again where we've had the major loss event there, the reduction in the assets. I hope you found this helpful and thank you for watching.